In money matters, the JSE All Share Index remained relatively stable, reflecting cautious investor sentiment due to the escalating violence in the Middle East, which heightened risk aversion in global markets. Trader and founder of Herenya Capital Advisors, Petri Redelinghuys, joins us now to take a look at the local currency and the latest company news. Thank you very much, Petri, for your time this afternoon. The rand was pressured by a strong US dollar last week, falling to the lowest levels since June. How's it trading at the start of the week?
Good afternoon. So, firstly, it sort of strengthened a little bit on Friday. Overall, the theme for the week last week was still somewhat negative. It did strengthen just a tad on Friday, and however, it seems as though we're giving back much of that ground. We're currently trading at around 19 Rand 39, so call it 19 Rand 40. I think we peaked around, or we spent most of the day, at least on Thursday and Friday, around 19 Rand 52. So, from that perspective, we're still a little stronger, but it's not a great start to the week. I think the events of this weekend, what's happened in Israel, has really created a large amount of fear in the market. So we see gold prices up 1%, the oil prices up almost 4%, and this is obviously leading to a little bit of pressure on emerging market currencies, as well as upward pressure on commodities. So I think we're probably going to see the US is closed today for a public holiday. So we won't be able to get a lead from what the US market is, going to do. However, I do think that over the next week or so, we'll probably see quite a strong flight to safety, as the saying goes. So we see people kind of piling into treasuries, piling into safe haven assets, gold, commodities, that type of thing. I think there's a lot of stuff that comes up with conflict in the Middle East generally. One of the things is, if we look at the last time, I'm not sure which year it was, but there was a brief war that the Israelis fought over the Yom Kippur period, which is kind of the same period. I think it was from the 7th of October to the 25th of October. And we're sort of in that period now, right? The last time something like this happened, the oil price went from like $5 to $50, right, over a space of a couple of years. So there's a lot of speculation around, well, what is this going to do for the energy prices? We've seen the Saudis also chime in, sort of condemning Israel, for the actions that they are now planning on taking as retaliation for the attacks that took place on them. And this sort of puts this NATO versus BRICS situation in motion. So BRICS now, with the help of Saudi Arabia, obviously now control something like 80% of the world's oil production. So I don't know, things can get really spicy, right?
Yeah.
Which way it's going to go, nobody knows, but what we do know is that the oil price is flying today. It's up. It's been quite volatile. It was up all the way at $88.80, maybe even a little higher than that. Earlier this morning, it's now trading at around $87.73. So as you can see, it's very volatile, but even at its current level, it's up around 4%. So this, as you can imagine, is playing out relatively well for our market, right? Our market is very commodities focused. We have a big concentration of commodity stocks, obviously, that make up the majority of our index. So if we look at sort of the constituents of the top 40, we see that most of the commodity stocks are up relatively strong, and that's pushing the top 40 index up as well. So if we look, won't really mention, I guess Northern Platinum is a relatively big company. That's almost 8%. Anglo-American Platinum up 7.5%. So Sibanye, Stillwater, Harmony Gold, Goldfields, Anglo Gold, all these guys are up sort of in the 5 to 7% range. Sasol, Impala, Exxaro. So there are some big moves in the commodity space, and that's putting quite a bit of upward pressure on the market. So if you look at the surface of things, it looks like our market is handling it fairly well. However, it's really just a flight into those safe haven assets, the golds, platinums, commodities plays, US treasuries probably when the US opens on Tuesday will be quite popular as well, I'm sure. So it's going to be an interesting week.
It promises to be. South Africa's benchmark 2030 government bond was weaker in early trade. How is it trading now?
To be honest with you, I haven't really been tracking it too much. I think, though, from the perspective, from which I just came, is sort of, we're considered one of the riskier assets out there. And actually, if you look at some statistics as well, I think we're averaging something like $32 million a week that's leaving South Africa at the moment as foreign investment is sort of running out of South Africa. So this negative sentiment really is a big driver in asset prices in South Africa at the moment. And, there's a lot of reason for that. I think we've spoken many times about how South Africa scores own goals very well. So I think that's probably a result. We're seeing weaker bonds because foreign investors are fleeing riskier assets, and we've already been somewhat unpopular in the international arena. I think now with the events of the weekend, people are just taking risk off the table and saying, well, look, South African government bonds might yield really nice or might yield really high returns. However, it's very risky. The prospect of, expanding global war rushes us into assets that we can see and touch and hold, like gold, for example, or U.S. treasuries.
It's quite scary when you speak of the disinvestment, because you go to the chemist. Recently went to the chemist and the doctor, and there was a certain medication that has been discontinued, and that has also been put down to disinvestment, the company pulling out of the country. Famous Brands has published a trading statement for the 6 months ended 31 August 2023. Help us make sense of their performance.
So, I guess it was a little bit worse than what the market anticipated, right? So, headline earnings per share came in around R2.15, and the expected earnings per share was somewhere between, was sort of around R2.21. So it's a slight miss on the expected earnings, I guess. So we can see the share responding relatively negatively, 2.5% down. So I think it is a little unfair as well if you look at the overall market performance for the day. Like I mentioned earlier, the commodity stocks are really up, incredibly strong, and everything else is under a little bit of pressure. So Famous Brands did disappoint a little bit, I think. However, I do think that, the market is potentially a bit more fearful. So it's a bad day to miss earnings on. So, 2.5% down is not the greatest result.
Okay. Serious Real Estate's update for the 6 months ended 30 September 2023 is also out. Talk us through the numbers.
I'll be very honest with you, I have not had a look at that at all. So I don't really want to comment too much on that. That's okay.
Petri Redelinghuys, thank you very much for your time, and have yourself a magic week.